What changes to Social Security go into effect January 1st, 2019? That is the subject of today's episode, and I'm heading over to the studio right now. The biggest change, would be the cost of living adjustment. So if we take a look here at my screen, in the year 2016, the cost of living adjustment was a big goose egg. Interest rates were historically low, and there was really no inflation in 2016. And so nothing that year. 2017, we got a very small bump. 0.3% was the cost of living adjustment. In 2018, this year, we had a full 2%. However, Medicare increases took up most of that. And so most people didn't really see much of a change in their actual benefit. However, in 2019, we are getting a full 2.8% cost of living adjustment, and Medicare did not increase much. It is not taking much of that at all. So that will be a little bump in your benefit for 2019. Now, the idea behind Social Security is that it keeps up with inflation. It is an inflation-adjusted program. And so let's take a look here. Let's go back 100 years or so. Okay, if we start with the decade of the 1920s, this is what it looked like. For the whole decade, you can see that each individual year there were some really big swings there. But for the full decade of the 20s, very little inflation, almost none, 0.08%. In the 1930s, it was a negative 1.94. In the 1940s, we have 5.63%. In the 1950s, 2.05%. And in the 60s, 2.36%. And then we get to the 70s, where we really saw a lot of inflation. The average for that decade was 6.5%. In the 80s, it was also very high. If you look at 1980, 13.5% just in 1980. I remember that very well. I was in high school in 1980, and I remember how crazy and how high interest rates were. 1981, also very high. But you can see that anyway, for the decade, we have an average of basically 5.5%. In the 1990s, we had right about 3% inflation. In the 2000s, 2.56%. Now, our current decade, we haven't finished, right? But from 2010 through 2017, inflation was 1.69, and it's certainly going up from there. But if we take a look at 100 years, from 1917 to 2017, the average inflation has been 3.24%. Now, if we look at just the last 50 years, from 1967 to 2017, the average inflationary rate is a little over 4%. We're always going to have inflation over time. Each individual year can obviously fluctuate quite a bit, but we have to anticipate inflation. And it's nice that Social Security has a built-in cost of living adjustment allowance for inflation. The average cost of living allowance that Social Security has increased by since 1985 is 2.8. The idea is that it keeps up with inflation. It has lagged a little bit behind there. Another change that goes into effect in 2019 is the earnings limit. So this is for those who claim Social Security benefits early, prior to what Social Security considers to be your full retirement age. Very, very rarely does it make sense to claim your Social Security benefits early if you have much of a substantial income at all. It's much better to wait. So in 2018, earnings limit was $17,040. So in 2019, that has been bumped up by $600. So if you claimed early, and if your income exceeds $17,640 in 2019, you are going to lose $1 benefits for every $2 earned above the earnings limit. So essentially 50% of anything above the limit. Okay. Now, in the year that you reach your full retirement age, that earnings limit goes up significantly. It goes up to $46,920. And if you exceed that limit, the penalty is not quite as stiff. It's $1 benefits withheld per $3 of earnings above the limit. So once you reach your full retirement age, or the month that you reach, your full retirement age, you can work and you can earn as much as you want, and you're not going to have a penalty on your Social Security. That's not to say that you won't have taxes on your Social Security benefit, because you will, and we're going to have another video episode soon where we're going to dive into the details of Social Security tax and how that works. So let me give you an example here. Keeping the math really simple, let's just assume that you have a monthly benefit of $1,000. And let's say that you are still working. Okay, so this is assuming that you claimed early, and it's assuming that you're still working and earning money. So let's just assume in this example, you're getting $1,000 per month in a Social Security benefit, and then you earn that year a total of $37,640. Well, that happens to be exactly $20,000 above the earnings limit, just to keep our math simple here, which means that you now owe the Social Security Administration $10,000. Now, are they going to send you a bill and say you owe us $10,000? No. What they're going to do, so if you've been getting this $1,000 deposited into your account every month, right? Then you file your tax return, and it shows that you had $37,640 of earnings. You're going to get a letter from the Social Security Administration, and it's going to say, if you are wondering why you are no longer receiving a Social Security benefit, it is because of this penalty. You essentially owe us $10,000. And so in this example, the Social Security benefit would stop for 10 months until that time had lapsed, and then in the 11th month, the Social Security benefit would start back up again. So if you think about this, if you claim early, that's $12,000 a year in this example, and then your net gain was only $2,000 in total. And so to take the penalties associated with claiming early, as far as not the penalties, but the reduction in benefits when you claim early, which we're going to talk about in more detail in a separate video. You've taken a reduction, and then you end up getting penalized on top of that. Your net gain in this example would be $2,000 for the year. Very expensive, poor planning. So you don't want to do that. There are a couple of additional changes going into effect in 2019. One of those is the maximum taxable earnings. So in 2017, anything that you earned up to $127,200 had the Social Security tax. The Social Security tax is 6.2% of your earnings, goes into the Social Security Administration. Your employer also puts in another 6.2%. And then if you are self-employed, you get to pay both. So you pay 12.4%. So the maximum taxable earnings in 2018, that increased to $128,700, and in 2019, it is increasing to $132,000. And then the fourth and the final change for 2019 has to do with the Social Security credit. So in 2018, you had to have $1,320 of income for the year to earn one credit that is used to determine what your benefit will be in the future. In 2019, it's going up slightly, $1,369. So not a big change there, but those are the changes for 2019. Now, there's a lot to talk about with Social Security, how to maximize Social Security, and Social Security taxation, and there's many different issues when it comes to retirement planning. And you really want to get it right because there's a lot of money on the table. And I will look forward to discussing it with you further in future episodes. So if you haven't already, please subscribe to my channel. Please select the little bell so you get notified when we upload new videos. And please feel free to make comments, send me questions that we can address in future episodes. So thank you very much. Appreciate your time. And until the next video.